Can you give us a snapshot of what the pensions industry looks like in Ghana today with regards to the numbers? What's the size? I ask because of the amount we are learning is going to be used to help just 5 banks, 2 billion. What's the size of the pensions industry in Ghana today?
So if you take all the corporate trustees and the individual trustees together, approximately we are talking about 12 billion Ghana cedis.
12 billion Ghana cedis.
Exactly. That is for the private trustees.
Private trustees.
Yes.
So we haven't added SNIT, which
you
is
haven't added
player.
SNIT to it. I think if you add SNIT to it, you'll be talking about 21 billion, 22 billion Ghana cedis.
For where we are as an industry today, since the pensions industry was reformed in 2008, is that a good number for where we are today? 8 years down the line, or 10 years down the line, I beg your pardon. Is that a good number?
Definitely. If you look at 8 years ago, 0 when it comes to private trustees. There was only SNIT. And currently, if you look at the size of SNIT, it's approximately 10 billion. And within the 8 years, all the private trustees together have been able to raise 12 billion. So I think the number is good. If you look at even the growth rate, every year we are growing with 20%. So I think it's a success story, the pension industry in Ghana.
Mr. Andrews,
yeah.
Over 20 billion in assets.
Sure.
I believe you call it assets under management, AUM.
Yes, assets under management.
Over 20 billion of it.
Yeah.
Where do we put these funds? Because where I sit, I would see that a lot of money will go to, from a layman's perspective, treasury bills, government securities. Okay. That's where I would see. Okay. Give us a snapshot of where we can put pension funds within the Ghanaian context, and where can we make the most return so that come 40, 50 years, I have something to fall back on.
Okay. In Ghana, the pension industry, we call it a regulated industry. So things are done based on guidelines and laws and then rules that are issued by the regulator. So when it comes to investment of pension funds, we have guidelines that are issued by MPRA, which is the regulator, and these guidelines are actually the framework through which the trustees design what we call investment policy management. From there, based on the guidelines MPRA has given. So under the MPRA guidelines, there are about 7 to 8 asset classes that you can, put these pension funds into. Some of the asset classes include putting money in government of Ghana bonds, putting money in corporate bonds, putting money in banking fixed deposits, putting money in equities, putting money in collective investment schemes. So this range of asset classes that has been, how would I say, gazetted by MPRA through their guidelines are, investment policies, statement that the trustees use, and they have given those statements to fund managers. So fund managers are to look at this sort of framework that has been designed from the MPRA through the trustees. Then they have to look at it and make recommendation of any asset that they come, looking at these sort of, how will I say, instrument that they have been given, so that the trustees will make those investment decisions anytime, there is that funds available to be made. So there are clear guidelines as to how investments are done when it comes to pensions.
Let me just ask a follow-up question on this. So can pension funds be invested in banks within the country?
As at 2017, based on MPRA report, you will see that about 60% of the pension funds were in government of Ghana.
That's treasury bills, bonds, etc.
Yes. However, 23% were in banks in the form of fixed deposits, because we were already investing in banks. That is money market instruments. So if you know investment, money market and capital market. And money market is an, investment avenue that you can put pension funds in. So based on the return that they were giving years past, most of the investments were going into some of these, instruments issued by banks. But with the changing in the investment climate, I'm sure 2018, I would say that maybe the MPRA report may come. We may not see 23% again. Probably it may go further down because of the change in investment climate due to the collapse of banks and all that. So most of the pension funds are shying away, from investing in banking assets, going into government of Ghana. For example, you are going to a safe asset class where you can.
So our market is dominated by an investment in government securities.
Sure. That's what we are doing.
Mr. Waterberg, is that subtle practice across the world?
No, it's not across the world, but I think in Ghana, it makes sense to invest more of your assets in government securities, because at the end of the day, what you look out for is return and risk. And if you look at government securities, the risk are mitigated, it's minimum, and returns over the previous years were fairly good. So why will a pension funds take extra risk to invest in corporate bonds whilst you can get a good return with government securities? So that was one of it. But also, secondly, as my colleague said, the investment assets are regulated by MPRA. So when it comes to corporate bonds, we can do maximum 30%. When it comes to equity, we can do maximum 10%. So if
10% of the funds that you hold?
10% of the funds that we hold. So if you look at all the asset classes, likely majority of your assets will be invested in the government. And it also makes sense. Of course, government needs money to develop the nation. So if they can get money from the pension funds, why not?
But let me just push this here. One would argue that, you know what, giving money to government is safe, arguably. But why don't you channel these funds to other sectors of the economy where we can see quicker growth? Because if you're channeling to government, we've seen, even today we did a story on the issuance calendar. Majority of the debt is going to roll over maturities, with a bit going to finance government needs. And we see that the financing of government needs, there's a preponderance of recurrent expenditure. So shouldn't pension funds and shouldn't policymakers as a whole look at how they can push these monies without the necessary risk into other areas of the economy that will grow?
So let me speak from the pension perspective. So we as corporate trustee, what we look for is the interest of our contributors. So people give their money to us in trust, and they hope that when they go on retirement in 20, 30 years, we are able to pay their benefits. So pension funds is not money that you want to play with and you want to take a lot of risk with. So as a corporate trustee, you look at the return, but at the end of the day, you're also looking at the security. And if you look at the terrain, the various investments opportunities in Ghana, and the returns that you can make out of it, I think it makes a lot of sense to invest in government securities. Besides that, we also do, as my colleague said, we do a lot in fixed deposit to banks. We have been supporting the banks. Previous months, MPRA introduced investing in private equity, so that indeed we can also support the upcoming companies. So these are something that you do. Of course, private equity, the risk is of course higher than what you will get from a government security. So you're always looking at the pros and cons. Where should you put your money to? What are the returns that you can expect, and what are the risks?
Okay. You made mention of the investment guidelines. You were giving certain allocations. You said a certain percentage to equities. I'm interested in equities because of this Ghana Amalgamated Trust issue.
Right.
So it will mean that the pension funds that are giving the money to GAT, like we said, it's more or less like a loan to a bond to GAT. So GAT becomes the equity investor.
Exactly.
So GAT will not be bound by the investment guidelines of MPRA.
No, so
Okay. Let me just add this quickly. You know, when it comes to equities, equities simply give the ownership right to the one who, you know, make those investments. Now, with the MPRA report again 2017, only 1%. Imagine I'm saying 61% going to government, and only 1% out of, as at 2017, we are saying 11 billion was private pensions. If you add SNIT, it's over 20 billion. And 2018, we are expecting that it to be around 22, 23, or 25 billion. Right. So if you look at this huge money, and only 1% is going to equities, and why? One of the reasons is that some of the equity, before you can invest the pension fund in equity now, they should be listed equities. They should be listed companies.
So if they are not listed ones,
yes.
If they are not listed,
yes,
you can't invest.
No, you can't invest
in regards to equity.
Exactly.
Yes, but that is why this gas issue we are discussing. The pension funds, when these bonds are issued, for example, by GAT, who is this private company that has been set up,
the special purpose vehicle,
the special purpose vehicle to issue bonds. Now, pension funds going to buy these bonds with the money which is investment, they are holding these bonds, and these bonds anyway will be guaranteed by what? Will be guaranteed by government. And we've done that before. If you look at an example called ESLA, we did that in 2017, a lot of money from pension fund, because to be frank with you, government is even paying higher interest rate compared to going into the banks. or even private sector. If you look at,
so it makes more economic sense to put your money with government.
Yes, because if I can get 21%, from having a 5-year or 10-year bond with government, why will I go, and 21%, I mean that 21% every year for 10 years. Why will you go to maybe a private sector and then get fixed deposit, for example, maybe 18%, 17%? Okay, so like my colleague would have said also, as much as we are looking for safety, you're also looking for returns, because don't forget, it's people's money that you have to yield some returns so that they can grow and have some money that they can use during their retirement. So definitely return is a part of it, as well as safety you are looking at. So when it comes to equity, it's quite dicey. And looking at our equity market in Ghana, we still have a long way for its development.
Mr. Waterberg, you wanted to make an intervention before?
Yes. So I think two things. When it comes to what GAT is doing, they are giving out a bond. And we, as pension funds, we can invest up to 30% of our assets in bonds. So this is an instrument that we can invest into it. Of course, when you are investing in a bond, you want to know who is the one issuing the bond and who is the one going to receive the money. So at the end of the day, I think all the pension funds, before they will even invest in the bond, they will analyze all these 5 banks to make sure that are they solvent and are they able to pay back the money that they have received. So
Bank of Ghana says the banks are solvent and well run.
That is what Bank of Ghana is saying, and definitely I believe in them. But we, as a corporate trustee,
you have to do your own valuations.
We'll do our own valuation, we'll do our own checks before we will invest money into it.
I want to ask both of you a question. I'll start with Mr. Waterberg. Yeah. 2 billion is what we are learning.
Yes.
Whole industry is 21 billion. Let me do some quick maths. 2 over 100 times 21, percentage terms. Do you think we can find this 2 billion in the market right now, looking at the NPRA's investment guidelines or restrictions, if you can call it? Can we find this 2 billion in the market? Mr. Waterberg.
Okay. So if you look at the assets of the pension, the private pension trust, which is 11 to 12 billion, and out of the 30% can be invested in bonds. So then you're talking about between 3.5 billion. So that 3.5 billion indeed, of course, will meet the 2 billion. But the assets have already been invested. So it means that if we want to raise the 2 billion, it's new inflows that will come in, or we have to de-invest some of our assets that we have. And my concern that I have is because I read that they wanted to raise this 2 billion in March 2019, which I think will be difficult to raise new flow of pension contribution before March 2019.
Mr. Andrews, do you think we can get 2 billion in this market?
That is where I also have a bit concern about the funds involved. Because don't forget, last year, MTN tried to raise, 3.5 billion. What they got? 1.1 or 1.2 billion. Yeah. That's what they got from the market. But don't forget, maybe that is equity. So, but the other side, depending on how this bond is issued, for example, if we open it up to invite international, if it's treated as not only to the local market, then I think we can get that 2 billion, because most people, for example, what is being said, probably what people we are gathering, for example, will be, for example, a 5-year bond, which will be giving around 21%. If you compare going to invest in America, where you get about for a 10-year, you are getting 2-point-something%. Yeah. And if you come to Ghana, you are going to get 21%, and you have a government guaranteeing that. Though you compare the exchange rates, differentials. Definitely, it's worth considering. But like I said, depending on how the bond is finally structured and who will invest it, if the national will come in, then I think that 2 billion can be raised.
So let me add one more thing. I don't know if the government have said that they are going to guarantee the bond. We should make that distinction clear. Okay. Because of course, if the government comes out and say that they will guarantee the bond, then likely people will invest, because then there is no risk. Because at the end of the day, if the GAT is not able to pay, the government will come and bail it out. But I think for now, the government hasn't come out to say that they will guarantee. So it means that now if anyone that invests in the GAT, and these 5 banks are not able to indeed to make enough returns and to pay back, then the risk, of course, will lie on the pension fund. So I think that is
Let me add quickly, because of the ESLA that we are currently holding, most of pension funds are holding ESLA. We bought 7-year ESLA for 19%, 10-year for 19.5%.
Yeah, exactly.
Now in the secondary trade, which are being traded on the Ghana Stock Exchange, ESLA now, most, if you want to get a 10-year and all that, it's around 20-21%.
Yes.
Because it's a trading. And this instrument that is likely to be issued is expected to be traded on the Ghana Stock Exchange. So as you trade it and you go ahead, and even ESLA was also guaranteed. ESLA was designed, it's a special purpose, if you remember, for the energy sector debt, right? Which most people bought into it and all that. So if this one is being designed for banking sector situations, I think this is not new. We've done it before, right? So once the returns are there and the guarantees are there, I think pension funds, you are looking for places to put the money.
And this all goes back to the details that should come from GATT and or Ministry of Finance to allay the fears of contributors, because I think that's the key concern, that if you put it in these banks and it doesn't go well, then we have a problem.